Phil LeBeau joins us from Ford headquarters in Dearborn, Michigan with Ford's CEO Alan Mulally. It's a first on CNBC interview. Over to you, Phil.
Hi, Sue, and I am here with Ford CEO Alan Mulally on a big day for you guys. Alan, the stock is rallying largely because you guys delivered far better results than expected. A loss of $1.9 billion, 75 cents a share, and that's pre-tax, excluding charges. Revenue about $2 billion better than expected, and a cash drain of just $3.7 billion, which I know is a lot, but a lot of people at home need to put in perspective where you guys were at and where you're going.
Well, absolutely, and just on the cash burn issue, because it's just so important to us continuing our transformational plan, that cash burn is less than 50% of what we had in the third quarter and the fourth quarter, because we've been managing not only the profitability, but also all of our net assets and our working capital. So and we also committed today that we believe we can reduce that cash burn every quarter throughout the rest of this year.
When you look at this cash burn, you told me this morning that we believe we are turning the tide in North America. Third quarter, you're burning through roughly $83 million a day, down to $59 million in the fourth quarter. This most recent quarter, you're going through $41 million a day. When you say we see the tide turning in North America, there are some who will say you're still losing $41 million a day. This company still has a lot of problems.
Well, I sure understand that comment, but I think what we've got to do is back up to where we have been and where we're going. And we also validated today our guidance that we are on track to get back to profitability by 2011. So the most important thing about today is the improvement we made in the first quarter of this year over the fourth quarter of last year. And that's a substantial improvement, puts us on a glide slope to get back to profitability.
By 2011?
Yes.
Let me ask you about what's happening with Chrysler and General Motors. There is the possibility that by the end of next week, we see Chrysler in a Chapter 11 bankruptcy. GM could be there within a month. If they go into bankruptcy, how does that impact Ford?
Well, it's a very important question, Phil, and the President and the Automotive Task Force have put the automobile industry and having a viable industry as the top of their agenda on the economic recovery. And they know, we're very confident, they understand that the supply base is the most important because it's the most fragile. Right. They support all of us, not only GM and Chrysler and Ford, but also Toyota and Honda and the rest of the companies. So they put vehicles in place to manage and backstop the suppliers, and I think that they'll continue to take action to make sure that the supply base stays healthy as we go through this restructuring.
But if they can cut their costs down, GM and Chrysler can cut their costs down to the bone, is it possible that you're going to sit there and say, wait a second, we need to perhaps ask the government for some money because we need to cut our costs down further?
Well, I don't think we're clearly in a different place, Phil, and we started this restructuring 2.5 years ago. We have divested all of the other brands. We've taken out all the complexity. We have a laser focus on Ford. We have a complete product line, small, medium, and large, cars, utilities, and trucks, best in class in fuel efficiency and quality and safety. So we have taken the tough structural actions. We have a good agreement with the UAW. We're competitive with our operating agreements. So we are well down that restructuring route, and we have the money to continue this transformation.
You have talked with the task force in the past. You've been to Washington to talk with them. How often are you talking with them? And when you're talking with them, have you told them your concerns about the suppliers and whether or not they survive?
Yes, we keep a continuing dialogue going with them. They use us and our experience and where we are in the industry. And I am absolutely confident, Phil, they understand that the most important part that we restructure, and we do it carefully and we keep them viable as we consolidate, are the supply base.
Is the worst over for Ford?
Well, we think a lot about that as far against the economy, because clearly this is a very tough environment. The industry is down. We knew it was going to be down the first 2 quarters of this year. It's about where we thought it was going to be. We believe that with the banks stabilized, the credit freeing up, plus all of the fiscal and the monetary stimulus, that will start to come back the third and the fourth quarter. And we are going to be there with a very lean Ford Motor Company with the products that people really do want.
You are increasing production in the U.S. by 25% in the second quarter. And you believe we've probably seen the bottom. So from your perspective, this is where you start to see the upslope.
Well, one of the reasons we're able to do that is that we took decisive action in the second half of last year to reduce our production to the real lower demand, because we were able to get the inventory down, the dealer stocks down, keep the residual values up. So the fact that we took that aggressive action then, now we get a chance to move up a little bit to support the increased demand on the strength of our new product line.
There are going to be some people who will look at what's happened with Ford stock, which has gone from a low of just over $1.01 back in February and in November, and now it's trading over $5 a share. And I'm already hearing people on Wall Street saying, Ford's in better shape, but let's not jump on the bandwagon too much here because they're not out of the woods yet.
Well, we clearly are on a very good progress. There's a tremendous progress in the first quarter. Year over year, it's good. Over the last quarter is good. We have a long way to go. But do we have a lot of confidence based on this performance over the last few quarters and the last year that the plan is the right plan? It means that we're going to restructure ourselves. We're also going to keep investing in the new products. So we're very confident for the long term we're going to create a profitably growing Ford for all of us.
Real quick, any chance you could be profitable before 2011?
Well, a lot of things can change, but clearly there are things under our control that we are taking very aggressive action on. But there are a lot of things outside of our control. But right now our best guidance is that we're on a really good plan to get back to profitability in 2011.
Alan Mulally, CEO of Ford Motor Company, on a day, Sue, when his company reporting better than expected results for the first quarter. Sue, back to you.
And Wall Street's giving it a vote of confidence. The stock's up 16%. Thanks, Phil, very much.